Good morning, everybody. Happy Thursday. Happy post Federal Reserve Day. Is that a thing that we celebrate? I'm not really sure. Anyway, welcome to the morning show, Stock Market TV. Spencer, JC, Steve, Alfonso with you every morning. Good morning, chat. Dawson, Mary, Josh, Ravi, Wavy, Peter, Jason. Good morning to you all. Hope your day's off to a good start. Let's see what's on the dock today. Todd Gordon is our guest. Love Todd. He'll be on in like a half hour or so to send over a few charts. Always a fan of what he has to say. And then also we are going to do a slightly abridged show today because a certain person has to leave early to go to the Berkshire Hathaway meeting in Omaha, and another certain person has to leave early to go to the Berkshire Mountains in Massachusetts. So we'll end the show at around 9:30, and between now and then we'll be doing earnings, charts, monthly candles, session call highlights. You know the drill. All right, enough about that. Let's go. Where's my damn intro? There it is.
Hey now.
Hey.
What is happening?
Where's Steve-O?
Bring him
He's
in.
here. He's around.
So last night was our live monthly strategy session. This is, I got to tell you guys, and I just want to reiterate this. I know I do this a lot. I do it once a month. You know when I do it every time I have just completed the process of the monthly charts strategy session because, and if you listen to nothing I ever say ever for the rest of my life, listen to this. There is nothing that we do that provides as much value to our process, and I'm being totally selfish here, to my process specifically, but I've heard from others that they agree wholeheartedly, as the monthly charts. It's one data point every month. It's just one. But what it allows us to do, it allows us to come back home to remember the underlying trends of the market, whether it be in stocks or in interest rates or in energy or in metals. It brings us back home. It's very easy, especially for us that are doing this every day, but really any investor. What did the Dow do today? What did the Powell say? The election, blah, 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 blah. What is the trend? And this process not only allows us to do that, it forces us to identify the primary trends. How am I doing, Strazza?
We must be talking about monthly charts.
You know me too well, my friend. You know me too well. It is so valuable to the process. I wouldn't even be able to tell you what the second best part of the process would be. I would say maybe our weekly meetings is probably second best, right?
Would you say that you take one out of every 4 weekends and focus just on monthlies and are looking at a lot less daily and weeklies?
Yeah, I mean, listen, we talked about some daily charts. I mean, you know, like a great example is like financials. Here, throw up slide 5 and 6 quickly so you can kind of see like the process here. So we're looking at the monthly candlesticks here for financials, and then we're looking at weeklies for more tactical opportunities. So go back to the monthly. You were right. Go back. Yeah. So these are the monthly candlesticks for financials. Just random example. Huge base, right? There's the 07 highs, pre-great financial crisis. We got back up there in 18, got back up there pre-COVID, failed 3 times, finally broke out after COVID, right? Reached those key levels, late 21, corrected along with everything else. That former resistance from 07 and 18 and 20 turned into support in the summer of 22 and over the last year. And now we're back to the former highs from late 21, right? So these are the big picture trends. And then if you zoom in now, so this is the multiple time frame analysis. You can then zoom in to just the last few years, and you can then see those former highs in late 21, early 22. We got back to those levels, failed, right? Common sense, very normal market behavior. But without the monthly charts to understand this particular set of 3 years falls within the context of this massive base breakout in financials, then you're losing the context, right? And go back. So here's the short term. Now go back to the long term. This is just a zoomed in look at what's happening in the upper right. But without understanding what's been happening for the rest of the chart, it's easy to get lost in that noise. I just chose randomly an example of this multiple time frame that we talked about last night. How do you feel about that? It's a good example.
Yeah.
Right?
Yeah. That's how it
No
works.
comments? You agree? Too much agreeing
I
going
agree.
on this morning?
I do agree.
One more thing I wanted to mention, because I'm not going to be here for recess, because I am going to the Berkshire Mountains while Spencer is going to the Spencer's going to be going to the Berkshire Hathaway meeting.
Two different Berkshires, not the same Berkshire.
Not the
Two
same.
different Berkshires, not the same Berkshire. But throw up their slide 4, because I didn't want to get this out of the way because it's very important. Aglianico. Right?
Huh?
Aglianico. This comes from Campania. So this is like the Napoli, Southern Italy wine. It is so good. It's so good. It's sickening how delicious this wine is. And also very well priced compared to a Brunello or a Barolo or some of the other fancy shit we drink from Italy.
Where is it from?
Now, Aglianico.
Where's it from?
Campania. Delicious. Delicious. So next time you go to Napoli, order yourself some Aglianico. You're going to be just great. So good, dude. So good.
You're excited to go to your favorite wine shop. And
I am. There's a little boutique wine shop right around the corner from the Red Lion Inn over in good old
Stockbridge, right?
Stockbridge. What?
Yeah, Stockbridge. Yeah.
It's in Stockbridge, Massachusetts, right around the corner from the Red Lion Inn. They got some kind of tax loophole in Massachusetts. They got some hustle going on where the wine is very well priced. I'm into it. All right, let's hit it, Spencer.
Oh, state of the markets. Is that what we're doing?
Yes.
I guess so.
All right, guys. So we're looking at Dow futures this morning up 200 points. That is 0.5%. Then we're looking at S&P 500 futures up 0.75%. Right? Trying to get back up to that 5,100 level. NASDAQ 100 futures up almost a full percent, 150 points for NASDAQ 100 futures. That's 90 basis points this morning for the NQ. Bond futures down again, still at that 114 level. Looked at some longer term bond charts last night. Still downtrends, right? No evidence that they are no longer downtrends. Gold flat this morning above 2,300. Silver down almost a full percent, 26.5 this morning. Copper down a full percent, 4.5, hanging in there very nicely. Crude oil up 60 basis points, just under $80 a barrel. Dollar somewhat mixed in early trading, getting the crap kicked out of it relative to the yen. Yen absolutely ripping this morning. Holy cow. Volatility index back down to 15. And checking in quickly on the old funny money. Bitcoin up a full percent. Back up towards 59,000. Ethereum back to 3,000. Also up a full percent. And finally, Solana back to 138, up 2.5% on the day. Total crypto market cap, Spencer Israel, $2.14 trillion.
All right, we're hanging in there. I don't know.
Hanging in there. All right, so talk to me about this this meeting. Was it a 1-day meeting? Was it a 2-day meeting? Did it feel as good for you as it did for me?
I didn't watch any of the press conference. I just caught the notes afterwards.
All right. So is there anything we should know, or just non-event, boring?
I mean,
the most important Fed meeting in the history of the Federal Reserve.
We already knew what was going to happen. Nothing in terms of. Well, actually, no, that's not true. Something's going to happen from a policy standpoint. They are slowing the rate of their balance sheet reduction, so that would suggest. And they talked about inflation being sticky, obviously. So that would suggest basically a waning appetite for rate cuts. in the near term. It doesn't guarantee it, but anyway, it was
I think I'm more confused than ever. Can you just tell me in English what the hell you're talking about? Are they going to
did not lower. They did not change rates.
Right, we know that because they listen to the bond market.
They slowed their the rate at which they're unwinding their balance sheet.
So what does that mean in English?
It was dovish on all accounts yesterday.
Okay, that's probably what I just should have said. It was
nobody knows what the fuck you're talking about, Spencer.
No,
you're dovish on all accounts, which means what?
I'm over explaining. I'm over explaining. Yeah, it was just dovish. That's it. Dovish. That's all I need to know.
Which means what?
Stocks go up,
the opposite of lowering rates.
So they're going to raise rates.
Well, they didn't say that.
Didn't you say it's dovish? So what you're saying is they're going to raise rates?
No.
Well,
isn't dovish mean they're going to lower rates?
Yeah.
What are you talking about?
Hawkish is rates up. So the biggest, the Dove move was that they, what was it? They took off the easing by like $5 billion extra, or $5 billion less than they thought that they would, or something, right, Spencer?
All right.
No.
I think we are all now dumber after having this conversation. This is the dumbest fucking thing I've ever heard. Interest rates continue to go up, bond market continues to go down. Stock market, whatever it is that happened yesterday, you guys are confusing people more than ever. The stock market obviously didn't hate it. Up and down, kind of choppy last night. I like it, when they digest it a couple of days later, go back and review. So I guess we'll see what happens when they close the week. Thank you for nothing, Strazza.
So they asked Powell if there's a chance that he could do a hike. And he said,
Austin is right. This conversation accurately reflects the market's reaction. More confused than ever.
Yeah. So he said no to a hike, or probably not. And at one point, he was asked about stagflation, and he said, I don't see the stag and I don't see the flation. I thought that was pretty funny.
Shout out Fairfield Stags.
Yeah. So he doesn't see the stag.
No relation. No relation.
He thinks inflation will slow further. It's just going to take time, kind of stuff. So we'll see.
Let's move on. This
group came out with a note today saying they still expect 100 basis points of cuts this year. So 4 cuts.
Can you throw up slide 3, please?
Yeah, Goldman said still July. So,
well, as long as Goldman said it, it must be true.
They're all kind of saying that. I guess starting July, another 3 into the end of the year.
I got to tell you, this chart, generally speaking, is a good gauge for the market. Just in general, like always, right? Like it's up there in one of the more important things that we look at, right? Always. But in this environment in particular, I think it really tells the story of what's happening in so many sectors and so many individual stocks. These charts look like healthcare. They look like materials. They look like financials. We could go on and on, like individual stocks. It looks like software as an industry group, right? There are so many things out there that look like this, right, Strazza? I know you and Alfonso made a whole list of them. There's some factor ETFs and stuff like that look like this. But correct me if I'm wrong, like in this environment more than ever, this very much accurately reflects a lot of what's happening out there. Wouldn't you agree?
So many things look like this. The stocks that I've been buying look a lot like this. I think those prior cycle highs are as good of a line in the sand as any for new entries.
I also wanted to bring up something that I noticed quite a bit of yesterday. And that was kind of like a lot of these countries around the world were either making new all-time highs or are down for the first time in like 6 months, right? Here. Just throw these. Let's just skim through these quickly, Spencer, if you don't mind.
I got charts too if you need some.
I don't mind.
All right. Why don't we just we could just scroll through these. It'll start now at slide 6, and we'll just scroll through them. Right, slide 7 there. So we'll just scroll through these, and you can see that they either made a new all-time high or They closed the month down for the first time since like October or September. So here's London FTSE 100, new all-time highs. You can keep going. There's a 350. There's a broader look in London, new all-time highs. Here's EFA, great example. EFA, great example of like the equally weighted NASDAQ 100 and and S&P 500 getting back to the former cycle's highs. This looks a lot like that. Keep going. Germany, first down month since October, right? But line go up. France, same thing. First negative month since October, right? So I think these charts really help put things into context, and then you can keep going. Look at the Euro Stocks 600, which is equivalent to the S&P 1500 here in America. First down month since October. Euro Stocks 50, first down month since October. Denmark, new all-time highs, right? Stockholm, Norway, look at Oslo, new all-time highs. Look at Sweden, new all-time highs. So a lot of these things are either making new all-time highs or like the Netherlands here, first down month since October, right?
In the context of a structural breakout, right?
No
We're talking
question, right?
20-year base breakouts in some of these
and then go back, right? Exactly, and then go back to Greece. Greece made a new high, new 13-year highs for Greece. Italy had its first down month since October. But look at that base breakout.
Italy's been as good as anything.
Italy's been as good as anything. And usually people are talking about the food or the people or the wine.
Almost never the stock market.
Never the stock market. Greece also, for that matter.
Yeah,
Greece also.
They look similar, right?
Yeah, they do look similar. All right, keep going. Right. Turkey, this is priced in US dollars. Turkey making new 6-year highs, by the way. And then you can look at it price in lira next so you can get some perspective. So this is price in lira. So denominator fallacy here. Anything priced in lira is going to do very well, right?
So takeaway, right? Like you could go right on down the line. These international indexes, this is all in local currency.
Yeah, just keep going. We got a few more. Just to kind of go look at Hungary, new all-time highs. Look at Ireland getting back to those great financial crisis highs. And the reason I show this is because Italy and Greece have not, right? They still have a long way to go. If Ireland can do it, you don't think Greece and Italy can do it?
Oh, hell yeah.
That's what I'm saying.
Listen,
right?
It's a pig's theme for sure.
Shout out Ireland. Great country. What a great country Ireland is. All right, next. Look at Poland, new all-time highs, right? So a lot of them either were down for the first time since October or September or made a new all-time high. Do we have any more that we want to show? Look at Prague, new all-time high here from the Czech Republic, right? Just continuing to rock and roll. India, new all-time high. This is Nifty 50. Here's Nifty 500, new all-time high. Bank Nifty, new all-time high. We could keep going. Even in Latin America, I didn't bring them here, but Peru, Chile continue to make new all-time highs, right? Big theme there.
If you ask me what country I would buy over shorter time frames, it's one that you did not show.
I did not show last night, or I did not show today?
Right here, today. Can you guess it? If I had to buy a country right now for the next couple of weeks.
Couple of weeks?
Yeah.
China?
China has arrived, my friend.
Yeah. We talked about it last night, but we could have got. I mean, there's a lot of countries that we didn't talk about, but yeah,
it looks different. It doesn't look like those.
It doesn't look like any of those,
right?
I mean, you want to just bring it up? I mean, we might as well. We're talking about it. You want to bring it up?
I mean, the ETFs are up another 3% here pre-market, so I'm really, really psyched to get the close in today and run my rate of changes because I think we thrusting.
Throw up slide 3, 4, and 5, Spencer.
And the read on that, right? Everything that you just showed, overwhelmingly bullish. I think over shorter time frames, I think it does speak to some sort of pullback or corrective action, or
especially the EFA running into the former highs, Japan running into the 89 highs,
and like you mentioned,
yen is ripping off these lows.
Right.
So yen ripping off the 1990 lows, not a coincidence, I don't think. So here's China. Notice how China doesn't look anything like those other ones I showed. Right. So here's the Shanghai Composite, and then here's the FXI ETF bouncing off those lows. I said it last night, dude. I think this is a double.
Yeah, I'm with you. I mean,
how often do you hear me say this is a double?
We're trying to
come out of my mouth.
No. Listen, I'm with you. I think you want to pick your spots. We put something on JD the other day, so I'm involved very little right now, but I think you could just use the indexes. Something like KWeb or CQQQ gives you so much beta.
Yeah, but Strazza, if
What?
these ETFs are working, and you're right, I'm agreeing with you, by the way. I'm just
It
adding
ain't
to that.
bearish.
I'm agreeing wholeheartedly.
It ain't
If
bearish. I don't know if it's bullish, but it ain't bearish.
these things are working, these ETFs are working, then you know what's going to happen
Yeah.
is that there's going to be opportunities popping up at the individual stock name, right? At the individual stock level. There's
Yeah.
going to be more and more popping up on our scans, more and more breaking out. So, like, this is a great way to take advantage of the trend. But again, if this is working, if this trade is working and that trend is moving, there's going to be more opportunities to add on to that, is my point.
I got an interesting one. So we do this all the time. JD was just booted from the NASDAQ.
Was it?
Yeah.
Why?
Look at the drawdown for this thing.
Not really the only reason.
I don't know, but I don't think we should be surprised. It's just bad performance. I don't know. It's from China. They could remove it for just being from China. So it was in the NASDAQ 100 for like 10 years, and they just kicked it out. I guess I don't have the chart. And the stock bottoms. It's got a nice little reversal in place now. But it's a wild child, that stock.
And I want to go over the trade we put on yesterday morning. Throw up slide 2 quickly. I don't want to go over the details on strikes and expiration, anything like that. I just want to talk about it philosophically.
Mm.
You know, in this environment,
Yeah.
I continue to look for opportunities that are uncorrelated with the overall market. I continue to look for opportunities that are perhaps more delta neutral, right? And we want to be selling options when we're getting paid to do so. As the volatility index has fallen off its highs over the last week or so, a lot of these premiums have gotten sucked out. But we literally sort the most liquid ETFs by the ones with the highest implied volatility, and the junior gold miners were right up there. So even with a super wide spread, we were getting paid very nicely yesterday morning, to the point where I wanted to put on this trade. Well, we did put on this trade before any sort of Fed speech or announcement or anything like that, in the off chance that, you know, for whatever reason, the Powell says something that gold really, really likes or something like that. And, you know, these things squeeze higher and it sucks out all that juice. And we don't get paid anything. I didn't want to take that risk. So I wanted to make sure that we got in before that meeting. As it turns out, it wasn't that really relevant, but that was just sort of the mindset. So these are the types of trades I'm looking for. And I really like that one. And then also the natural gas. Throw up the new slide 2, Spencer. Here's another good one. Again, natural gas, very uncorrelated with the overall market, with interest rates, with precious metals. It's its own animal, like a delta neutral position in junior gold miners or anything else for that matter. Natural gas, just it lives in its own world. It's just its own thing. Now here's the key. Historically, these are great prices to be accumulating natural gas. Yes. Also, historically, however, it's usually really, really messy down here before it really gets going. So we talked about the strategy last night, how we want to express a bullish thesis in natural gas, and more importantly, when we want to do that. So Spencer, if you want to drop the link, if anybody wants to access last night's live monthly chart strategy session, Spencer will drop a risk-free link for you to go ahead and check
it
that
is
out.
pinned to the top of the chat right now. If you missed it, that's where it is.
Pinned to the top of the chat right now. How about that? The magic of the morning show.
You want to see it start working first, right? Drop a little
yes, but how do you quantify starting to work? So we went over that last night.
Yeah.
I think it's a good strategy.
Yep.
All right, that's what I got. What about you guys?
I think the people want some Carvana. Spencer, if you want to just give us their headline report.
You got to give the people what they want, Strazza.
So we were a little early on this one. I have no shame in admitting Sean and I got in it early. We got stopped out of our calls, so no position. This was a freshly squeezed name from a month or two ago. We covered the base breakout. We covered it again on the flag. Throw the chart up.
Well, it's freshly squeezed this morning. I can tell you that.
This stock has done very well for us, particularly over the last year and a half.
It's just a great chart too. It's so clean. So we're trading well above 100. I think they were up like 40% yesterday with the after hours action. Let me just double check.
You want to hear some fundamental stuff? It's good. It's kind of funny actually.
Yeah.
I would love to hear the fundamentals
Well,
of
it is
a
funny. It's funny because a year ago,
auto vending machine.
Q1 2023, this company reported that they lost $1.51 per share. That was last year.
Yeah.
This year, they made 23 cents per share.
Yeah.
So they went from a $1.50 loss to a 23-cent gain in 1 year.
It's really interesting what they're doing here. Yeah. I even see Q4 of 23. I see $1.
Even just look sequentially, $1 loss in Q4.
Lumpy earnings, though. I never like that. Okay.
Yeah.
The bottom line is you got still let me just double check my math, about a 30% short interest here. So when this one goes, it goes. And you're going to see that today. We've been seeing it all year. Really, we've been seeing it since last year. Who knows how high this stock goes? It traded as high as almost $400, $370 in 2021. So maybe more to come. But already had some good trades on. I wouldn't go rushing into this up 40% in the last 24 hours at all. But good for Carvana. This is the freshly squeezed bellwether.
Yeah.
We use Carvana as information, right? If Carvana's ripping, we're going through our freshly squeezed list, looking at all the other heavily shorted stocks even more. So
yeah, but also to add to that, what you're seeing in Carvana is why we look at stocks with high short interest. Stocks like Carvana are why we created the freshly squeezed list. Like, you're literally seeing why we do that. So when you look at moves like this and you reverse engineer what it takes for this to happen, that's literally the freshly squeezed report. Yep. Right? It reverse engineers exactly this. We've seen it before. We'll see it again, because what people fail to realize is that shareholders of stocks are only promising to be future sellers, right?
Yeah.
Short sellers are guaranteeing to be future buyers.
Yeah.
And people fail to realize. So whenever a CEO comes down and starts blaming the short sellers,
they're not just incremental demand, right? Natural incremental demand, but they're distressed demand in many cases.
They're distressed demand. And margin clerks don't enter limit orders.
They don't give a shit.
The market.
Yeah, they don't give a shit about your fill, right?
Yep.
So we'll see. We'll see how much this one runs. It's already been really good. 40%.
These margin clerks are going to be awfully busy in Carvana this morning, huh?
And good for you, Jason. You know, I'm trying to follow more rules. I'm trying to make some more rules for myself with my own trading. But you know, when you're naked long calls, you really should go in with the mindset that you're going to lose it all. So if you don't stop yourself out when you're naked long calls, I don't think that's an irresponsible way to trade.
Yeah, for me, that's one of the things I love about naked long calls is that you already have risk management built in. Assuming you do nothing else, you're a limited partner. You can't lose more than what you put in, right?
That's right. Yep. So good for you guys. Love to hear people making money. Ooh, ooh. See a bull market.
It's a bull market depending on your time horizon, of course. Strazza, here's a good one that I want to talk about.
China.
And then can we bring on Todd as well?
What's that?
Can we bring on Todd as well?
Yes, please. Hold on. One quick chart.
Yeah. Okay.
I don't want to hear your thoughts, because I think that how these bull flags resolve.
Did you say I don't want to hear your thoughts?
No, I do want to hear your thoughts.
Oh, okay.
Here. Throw up slide 2 quickly, and then we'll bring on Todd. So this is the chart for me that I think is going to determine the next leg higher or lower for a lot of assets, you know, stocks, bonds, etc. Why don't you zoom in on there, Spencer?
I thought first you were about to show me a chart of the Geo Bowden, but okay.
No.
Okay.
I like where your head is at, though. Right?
Yeah.
Correct me if I'm wrong. This is going to tell us a lot. These are bull flags in rates and dollars.
Here's the thing.
Probably not good for stocks. If these resolve lower and these bull flags do not break out, that would probably be good for stocks. How do you feel about that?
I'm gonna consider the market right now as the S&P 500 index or any of these major averages, and I'm gonna say, so don't fight me on this. I'm gonna say stocks have been rising with a rising dollar and rising interest rates all year. Maybe not with the strongest internals backing that, but the major averages have more or less been moving steadily higher this year. Despite this, if these fail and roll, you think stocks are all of a sudden going to roll over? They've been really resilient, is my point, right?
No, if these things roll over, I would say that's good for stocks.
If these things roll over, it's go time.
I think so.
Because they've been so resilient in the face of this. This typically, charts like this, we're looking at lines that are moving down and to the right in equities, right? Haven't had that at the index level. I know internal's fine. But that resilience really stands out. If these roll over here, I think we have a great back half of the year.
Now, I agree with everything you're saying, and it's just math, so you'll agree with me that these higher lines in rates and dollars have in fact impacted stocks because most stocks just haven't been going up, right? You know, so even though you're not seeing it at the index level, you can say that most stocks have been struggling in an environment that these lines have been going up. So looking for stocks that have shown relative strength in the face of a rising dollar and rising rates should be the ones to lead once the dollar and the rates start to roll over. Would you agree with that?
Yeah. I think you'll see if these roll, you're going to see the Q4 tape return. Real estate, banks, bios, spec tech, right?
Small cap.
IWM breaks out finally.
Yeah.
This might be
value line makes new highs.
That's right. That's right.
Yeah.
Biotechs were finally saying, "Oh, it's a completed reversal."
Look at us. Look at us agreeing so much. So nevertheless,
too much.
Nevertheless, flip that on its head. If these things rip to new highs, stocks are under pressure.
Sorry. Can we do a programming note? I'm a little bit confused here about what's going on tomorrow.
Spencer's going to be at the Berkshire Hathaway meeting, which is not in the Berkshires. It's in Nebraska. Guys, I will be in the Berkshires.
We're not talking out here. I could have been golfing with Lawrence Taylor today. I didn't know we had the show canceled tomorrow. I'm like,
wait, did we just cancel the show? I was going to be on the show.
Oh, so we are doing a show. Okay, then I feel a lot better because
the Strazza show is coming back. I will knock. Why don't we bring on Todd Gordon?
Please.
God.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Todd Gordon in the house.
Hey guys, what's going on?
Is there anybody who's got a better home office setup than Todd Gordon? Seriously.
It's a man cave. Full man cave, right? Right, Todd?
It's the basement bar. Like I mean, it's not an office. I'm Wayne's World here down in the.
No, man, you make basement. Like videos about your setup. I see
you. Cool. You got all the cool tech.
These markets are too much work to do any fun videos, like anything but the market. It's like I should do more. I appreciate it, but it's been full on, guys. How you doing?
Oh, you do good. I see you on the gram. I like
Thanks, man.
I see you. You used to do fun videos. I remember running into you like in Vegas, and you got like a camcorder. You're like, "Hey, JC, say hi." I'm like, "Hi."
A camcorder. My Clark Griswold, like a shoulder.
Yeah,
shoulder
you're the Clark Griswold of technical analysis. Yeah, that's you.
Yeah. No, all good. What's going on, guys?
How's Twin Life, baby? Twin Life for the win. Let's go.
JC, dude, I'm coaching travel baseball. I'm helping on the rec team. The Twins. One's pitching, one's catching.
Love it.
Wait till you get there, man. It's wild. We're undefeated on the season. So all we do is I coach baseball and try to figure out this market. It's good.
He's going to need some pointers from you.
Dude,
I've been talking to him for a good couple of years.
Trying to figure out markets, baseball at night. Trying to figure out markets, baseball at night. Todd Gordon, same thing. I'm not quite there yet. My kids are a little younger, but I'm looking forward to it.
You know, and I told you the same thing. You know Mitch from Benzinga?
Yeah.
He just had twins. And he just texted me yesterday. He's like, dude, you're right. It's it's just a different world. He's like, twins are super hard. One, don't take advice from anybody who doesn't have twins. And two, like, just expect to get your world rocked. But it looks like you've handled it well, JC. I have to give you props. It looks like you're pretty smooth with it.
Listen, we we've got help, and they're not bad. The 3.5-year-old helps out. Like, we got a good system going. We've come a long way in a year and a half. Let's just say.
Yeah,
so,
yeah,
it wasn't
definitely.
always like this.
Jason, go O's. We're Yankees fans, so they've got better record in the NL East now. But anyways,
Orioles fans, and they're in the AL. Okay, so Todd, what's on your mind, right? Like, let's just start there. Like, just kind of bigger picture. Like,
yeah,
here we are, May the 2nd.
I was listening intently to what you guys are saying. It's a really interesting conversation about dollar and rates. And I know Strazza really. What's up, Strazza?
Hey, man.
Golfing with LT. Wow. It's a nuanced conversation with the FX market. And I sent Spencer a chart. I think you have to look at the 7 or 8 foreign currencies that comprise the dollar index. It's a little bit more of a nuanced story. Is it too early to throw out that? Perfect. So the low in the dollar index was like December 28th. And what I've done is I've taken, because some currencies are quoted dollar as the base currency, some as the counter, and I've normalized them all. So we're talking sterling dollar, euro dollar, CAD dollar, Aussie dollar, Swiss, and yen. The dollar index is on top. So dollar index, since the low in the dollar, is up 4.5%. But the real strength in the dollar is against what they call funding currencies, which are Swiss franc and the yen. I used to trade FX for a hedge fund during the global financial crisis when JC and I first met. When you're seeing you're seeing moves into yen and Swiss, that's not the same message as if sterling was down, euro was down, CAD was down, Aussie, Norway, Kiwi, like those are all risk on offensive cyclical currencies. So yeah, the dollar is strong, but it's concentrated against the Swiss and the yen, which that is not a collective message of risk off. On top of that, the weakness in the yen, BOJ just intervened. But if you look at the weakness in the yen, that generally correlates, dollar yen correlates with higher Nikkei. And Nikkei is one of the brightest spots in Asia. And I think that then in the world, right. And then that comes back to the US. So it's like, I think it's a nuanced conversation. Again, if the commodity-based Asia proximity currencies like Kiwi and Aussie were all getting cracked, and Singapore, like, okay, that's a problem. But they're not, because they're only down 2, 3, 4%. So I think we have to be careful in just saying dollar strength is bad for the stock market, because in fact, macro relationships would say because of relationship to Nikkei, it might be a good thing right now. But we're not talking absolutes here.
Now, with that being said, what happens with the Japanese yen doesn't necessarily need to correlate with what's happening in other currencies, to your point.
Well, exactly. And I don't want to waste our valuable time on this, but like, the yen is perpetually on the wrong side of the dollar trade. It's weird. So it's because of the yen crosses. The yen crosses are the way that money managers put on the yen carry trade. They'll sell yen and borrow it at 0.5% or 1%, and then invest overseas Australian bonds at 4 or 5%. That's the carry trade. So what that means is, like, if Aussie, sterling, euro, CAD, Norway is all up on the day as the dollar's down, usually the yen is on the opposite side. The yen's,
think about what's happening with the yen. Dollar yen is running into those 1990 highs.
Right.
Euro yen is running into former highs, and pound yen is running into former highs.
Right. So, and Aussie yen too is ripping.
Everything is suggesting rotation into yen. Does that necessarily?
Other way. If euro yen, Aussie yen, sterling, if all the yen crosses are going up, the first one is strengthening.
No, but my point is they're running into resistance. Euro yen running into the former highs.
Okay, well,
pound yen running into the former highs. Dollar yen running into those former highs. And these are long-term resistance levels. So if those are respected, you're looking at yen strength, which obviously we're seeing today, which would coincide with Nikkei weakness, to your point. And what does Nikkei weakness mean for global equities markets? Probably not a good thing. How bad, I don't know, but definitely not a good thing.
Again, if those yen crosses were to run into resistance and sell off the first currency weakens, the second one strengthens. The yen strengthening would be a message traditionally of risk off to equities around the globe. That's it. But it's weird in here. It's weird in here with BOJ intervening and all that. But
here, just throw it quickly, and we can get into equities. Spencer,
Hold
throw
on.
on the first three slides.
One more on this.
Yeah.
If you're saying Swissy and yen, they're funding currencies.
Yeah.
How can you tell if you're getting a risk on or risk appetite signal from yen at all? It's what the other currencies are doing.
How can you tell? Yeah, right. So we're seeing dollar strength, right? And if the dollar strength came at the greatest expense against something else like Australia, which is heavily commodity based, its proximity to China. China is starting to sort of bottom out. We're seeing some relative strength there. If the strength in the dollar was focused most against those, let's call them higher beta currencies, then that would be a risk off signal. But the strength in the dollar is more pronounced because, the dollar is higher by double the percent against Swiss and yen, which, Swiss does not really correlate to global growth. It's just the stability, safe haven currency.
Look, Todd, running into the 2008 highs for euro yen. Look at pound yen.
Aussie yen also running into
pound. Look at pound yen, Spencer. Next.
Yeah, I'm just throwing up Aussie yen.
Yen back to those former highs, and then throw up slide 4 finally, and we'll finish.
Look at Aussie yen going back. I mean, it's like got a quad top. Listen, I got out of FX during the Euro peripheral debt crisis, and when interest rates went all around, to zero around the world, like FX was annoying after a while. So like it's good. We'll see what happens. I mean, Aussie yen's got a quad top going back to 1995 at 105. So I'd like to see Aussie break higher. I'd like to see Norway and Kiwi, and I like to see those guys move higher because I think we're seeing a rotation out of the U.S. We know what's going on. Fed's not cutting. We knew that was happening. We just got the first rate cut pushed out to November. So the dollar, the dollar's going to be strong as the rest of the, your ECB's looking to cut. What impact that has on interest rates, that's a whole other conversation, which I was listening to you guys talk about. There's so much going on here. And I tell you what, the move in rates, which I think is really driving FX, is the key driver of rotation in this market between growth value and then looking at the sectors that you want to overweight, underweight. I've never in 2 years, guys, I can't remember such a macro driven market from fixed income commodities, currencies, equities, I think crypto, then on down to the indexes, then the sector rotation. It's a big boys market right here. I don't know if you guys agree with that. I don't think it's been this busy since the GFC.
See, I'll take the other side of that. I think that as the bull market has progressed, we're almost 2 years into a bull market. As the bull market has progressed, the correlations have come off dramatically. So I think it was way more macro driven 2 years ago because correlations were through the roof with volatility spiking. And now that volatility has been so low for so long, correlations across macro assets have really come off tremendously. And a lot of fixed income correlations have changed dramatically. So I would argue it's less of a macro thing these days than it. I'm not saying it's not a macro thing. Yeah. To your point. Obviously it is. But it has to be less than what it was 2 years ago.
They've come off a bit, but the big question is, what's this 10-year yield going to do at 4.7? Is the 10-year yield going to catch up to where 2-year is, at 5.25? Is the 2-year going to catch up to where Fed funds is? So every time you see anything pricing data related, that employment cost number that came out, Strazza, I'm sure you were following that, anything inflation related that spikes up the 10-year yield, it doesn't break through 4.7, but you see all the value trade rotate in. You see tech sell off. What's going to happen? And all the algos and headline readers who see anything inflationary pushing that 10-year yield up, you see selling in the growth stocks. Okay, well, on the surface, I get it, but what's really happening below the surface is if the long end is going to catch up, 10-year goes to 4.8, 4.95, near term, there's going to be selling in stocks, but I think it flattens out that yield curve. I sent that chart along as well. When cooler heads prevail, we might say, okay, the 10 years at 5, the short term 2 years at 5, we've got a flat yield curve. and inflation running at 2 or 3%, real rates are 2.5%. And if we're really in a generative AI boom, we'll see how, chips so far have been good. If companies continue to print profits as they have with persistently higher interest rates, maybe to your point, JC, macro is going to become less important, and we could just go back to trading good earnings and good stock market breakouts.
Earnings.
So I think the intermarket picture is very complex, easy to get lost in right now. Throw up, before we go to this, throw up the 10-year and the dollar chart that we were talking about just before Todd came on. Can I just boil it down to something as simple as the bond market continues to drive the currency market? So these two charts are going to move together. Throw up the
100. Do you say the bond market drives equities or the currency market?
Currencies.
Yes, absolutely.
So these
absolutely.
are moving together.
And that's the core, and that's a takeaway.
Our market drives everything.
Well, I'm just trying to boil this down because there's a lot here, right?
There's a lot here, and exactly. The core driver of FX, guys, is its level of interest rates relative to interest rates around the globe. And if the view is our Fed is not going to lower rates and keep them high, where other central banks are looking to drop, the interest rate differential creates capital flows. Money's going to go to where the higher yielding currency is, and that is going to drive the dollar. And it's more pronounced against the yen, which, as we're circling back in the Nikkei, is actually good for the Nikkei. But again, if you start seeing those yen crosses, Aussie, and all those risk-on currencies, specifically against the yen, start to break down with dollar strength, that's when I say, from an FX point of view, now I think we're in trouble.
Yeah, it sounds like you miss your FX.
No, I love the stock market. No, man, no. And I hate to say it, I had a piece of Carvana this morning, and that was a nice gift when we woke up.
Hell yeah.
Yeah.
Good for you.
Yeah. I was a little lucky. But
but you put yourself in a position to be lucky. We say it all the time, like, oh, we got lucky. Yeah.
Yeah, when
you reverse, you put yourself in a situation where that luck happens. You've seen it before, you'll see it again.
Yeah, that's fine. Listen, it's good. What about, can we go to that value growth ratio? Because we've talked about this before, and this one is really getting me. This is the foundation, I think, of everything, the way I'm allocating money in the wealth management and in the on the research business. So the left one is just your traditional value growth ratio overlaid on the 10-year yield. And in 21 and 22, the orange line was going up, which was yields, and there was moving into value out of growth. And then 23 came around, and the growth trade said, peace out. Even though rates are going up, growth trade rallied relative to value. Again, on that top left chart, we have a triple bottom on value growth right now. And as rates are pushing up, all value growth can do is hold that triple bottom. What kind of message would that send if, as I said, with persistently higher rates, inflation, Fed not relenting, but we could drop through that triple bottom, value underperforming growth? Like, that is telling the market how strong, that's telling us how strong the market is, if it can happen. I mean, and then over in the mid cap, it's the same deal. That's mid cap value growth. Mid cap is not anywhere near the triple bottom lows, but we're seeing a little bit of strength in mid cap growth stocks here. So I just can't help but think, is this relationship between yields driving rotation into value out of growth with higher yields, is that breaking apart? Is it?
No, because you're seeing it much more pronounced as you go down the cap scale, right? So the larger caps, you're not seeing as much of an impact on rates, but as you go down, you look at mid caps. If you look at small caps, value has dramatically been outperforming growth, particularly over the last 2 months.
It's 100% right. And the simple answer to that is most of the small caps and mid caps, they finance their operations through banks that are very correlated to level of interest rates, where large caps can just go to the debt market, and based on the quality of their balance sheet, that determines the rate at which they borrow.
They're less vulnerable. So it makes sense that they're less impacted by those rates, right?
Right. And so many people are saying we can't be in a stock bull market because the Russell 2000 isn't going up. That's the stupidest thing I've ever heard. Like, 900 of those companies
that math. Those are just people who are bad at math, or Or usually what it is they haven't actually taken the time to go and count.
Right. Like I did the analysis. I think 800 companies of negative 12-month EPS in the Russell 2000. So I was like, I don't want those companies to go up. If everything's going up, even the crap, like, okay, now we're in a bubble. But only the fundamentally strong small caps have been responding. Like, look at the CAF ETF.
Did you just say hold on? You said 800 of the 2000 constituents.
Negative. I have the spreadsheet. Negative 12-month EPS. Yeah.
Okay. So that tells you everything you need to know about the Russell 2000. This is a
100%.
very low quality index.
Absolutely.
Right? You can't compare this to the S&P 500.
You're going to be hard pressed. You're going to be very hard pressed to find a worse group of stocks.
Like micro caps, the Russell micro.
Put them on the pink sheets.
No, think about it. They don't discriminate at all. It's just a market cap thing. If you're above 300 million, you're in. That's it.
Yeah.
That's the only requirement.
Yeah. Go ahead, Jay. I was just going to bottom line that point on CAF, like CALF, top 100 free cash flow, small cap companies, really good names in there. That guy's been kind of pushing the lower end of support. That's where I forgot what the level is, but if that CAF breaks down, like, all right. So I'm nervous. Like, I'm hedged. I got some Q hedges on. We're short Tesla as a hedge. I've got some short in Coinbase coming up earnings tonight. Like, I'm bullish. I like where we're at, but either it's fundamental macro, just the ship's too loaded one way. We've got some downside hedges on. We'll see. We're definitely in a sour mood right now. And the rotation is happening into value right now. We have energy, materials, utilities, to a lesser extent, cyclical industrials. Like, there's definitely a rotation out of growth right now. And I love the bull market and growth, but I'm really deciding how long is this outperformance in value going to last? And that's the big question on the table.
European small caps, by the way, European small caps have done very well. Indian small caps are making new all-time highs. So I think when you think about small caps, I think maybe look a little bit bigger picture. Todd, in this environment, messy, volatility's come off a little bit in the recent week or two, but we have been collecting income, selling options, selling strangles on ETFs, iron condors on individual stocks so that we're hedged. Naked puts in Berkshire Hathaway 2 weeks ago. Berkshire Hathaway was down like 9 days in a row. Sell the fucking puts. We hit our target.
We're going S-bonds on the morning show. All right.
But you know what I mean? Like, there's a time and a place for everything. And this has been a time where those types of trades are working.
Well, yeah, if you want to, okay. So selling puts is stock accumulation, right? At a discount, but if you're hedging with iron condors or just range bound, perhaps, if you're selling
forget the put sell. The put sell in Berkshire Hathaway was a little bit unique because it was down like 9 days in a row.
It's not unique.
The stock.
You do this
buying Berkshire, right?
But it's not unique, JC. How many times have you sold puts in Berkshire in a bull market? It's
a zillion times. Every time people are panicking, you sell puts in Berkshire. It works very well. But that's different. The strangles, like we put on iron condor and Nvidia last week, super wide spreads, and you're still this is like a 300-point spread at Nvidia. You're still getting paid. We put on a strangle.
How wide were the wings? How wide were the wings?
I don't want to get into the details on strikes and massive, way bigger than you'd think. GDXJ yesterday morning, 6-point spread, looking at 45, 60 days out generally. Collecting that income. With the ETFs, we don't put on the condor. We just stay naked on the ETFs because you have a built-in hedge with the basket. With individual stocks, we like to buy the wings, but this is the environment where these types of trades are working. I would say less so right now because volatility's come off some, but certainly a couple of weeks ago when volatility was much more elevated, it was easier to find these opportunities. Yesterday, for example, because what we do is we take the most liquid 30 ETFs and we sort by implied volatility. So we sell the ones that are paying us the most, right? GDXJ was that yesterday.
Yeah. No, I
want to hear your thoughts because I know you.
I'm not doing as much in the option side just because we're running individual equity portfolios. I'm using options more to hedge right now, and we're trying to set up the wealth management so we can actively trade options. There's some compliance issues with that. So I've been focusing more on individual equity portfolios, and I traded options for a long, long time. But I'm using more for hedges, more for hedges right now.
I've been drunk with you at bars in the East Village arguing about options. Yeah, and it's great.
Jeez, we got to find something to argue about. No, it's great, man. I mean, options are wonderful, wonderful. It's just, the longer I'm doing this, and the more I get into understanding the technical and fundamental balance between equities, like we can go on and on about the macro and the indexes that are largely range bound right now, but there are some amazing moves in some equity markets that are happening when you marry up the rotation, you find some good fundamental setups with good technicals. Like you can make a lot of money, and you're not susceptible to the time decay, especially holding long naked options. Like it's challenging. It's fun. You can make a lot of money, but there's also a lot to be said by holding good quality individual equity portfolios. It's been really
right now.
That's kind of where I've been sort of shifting my focus.
Right now.
We just put Dell on. I just bought Dell on the pullback. I thought it did well relative to the SMCI. SMCI couldn't please anyone with that earnings report, which was amazing. Raised guidance, beat expectations. Revenues
Are you
were
trading SMCI right now?
No, but I'm trading Dell. Like stock's only trading 15 times earnings. The analyst expectations are pretty small going forward. And if the AI boom is real and the AI server space is real, I like the setup there. Shake Shack is coming out with earnings in terms of gaining market share, their margins, their technicals doing great. I've been trading a lot of Celsius. Talk about a company that went from less than $1 billion market cap to eating up Red Bull and Monster, like crushing earnings, showing a lot of relative strength even within staples. Like there's some really fun stocks to trade out there.
Carvana,
dude. Do you know what
I want to put on an iron condor in all of these names.
That company is saddled with debt. A debt to equity ratio is 1. If it's 2 to 1, that's a lot. Do you know what the debt to equity is in Carvana?
4 or 5 to 1, isn't it?
It's like over 20.
What? Yeah, I was going to say 4 or 5. Has to be more.
Bonkers.
Yeah.
It's crazy.
The more debt, the better. Hell yeah.
And they keep issuing.
The higher the debt and the higher the short interest. Let's go.
It's crazy.
Risk reversal.
What's the CEO's name? They keep doing private placements. He keeps
Our Carvana?
Yeah, putting in more capital.
I'm not following that company as closely. But yeah, I've been holding 100 shares. I woke up with an extra $3-4 grand in the account this morning. So I'm like, cool.
One more name, Todd. We got you here. What give us something else. What do you like? Give us something good.
Let me look
Final trades.
Let me look. I like Shaq. I like, DraftKings, I think is going to be, I think DraftKings is another name they got to allocate towards DKNG. Yeah.
What time horizon here? Because all of these things are short-term messes. They all scream iron condor as far as I'm concerned. What's the time horizon?
It's the thing. Like I like to go into trades, and I'd like to have defined entry, stop, percent allocation, but I don't think how long you're going to be in a good trade. You don't know how long that sector is going to stay on the forefront. You don't know how long analysts are going to continue to upgrade forecasts. Like I think you go in knowing that, you could be in for a month or 2, or you could be out in 8 months with a ton of profit.
I was going to say, you want to be in longer. Hopefully you're in for a long time.
Right. Yeah. So I'm getting older doing this. I'm relying on price targets less and less, and just trying to control the now. Guys, like the last thing I'll say is, like, I'm sure you guys are going through this. It took me forever to realize, like, you don't need to know what the future holds or stress about what the future holds to make money. As long as you control the process now, and you're diligent about your process and where you are, listening to what the market is doing, control everything now, the future takes care of itself. And I never understood what it meant to say you don't have to know what the futures hold to make money. And I'm kind of at that spot in my career.
All right, last question. What do the Twins like more, skiing or baseball?
Oh, dude, I think they're breaking my heart. I think they're much more baseball.
Didn't see that coming, Todd.
I didn't either, man. But hey, Hey,
They're
I'll
good little
support
skiers, though.
anything they want to do. No, it's all good, man. Life's good. Life's good. We just got to figure out, man, can we live with 5.25 interest rates?
Hell yeah, it's going to 10. Let's go.
Does that derail everything? Where do you guys, last thing, where do you guys think rates are going? Where are we going?
Sideways.
Yeah. I mean, we could be going into the great Fed pause.
Sideways for now, higher for longer, bigger picture.
Yep.
Yeah,
I mean,
this bond market crash just continues.
And mega cap tech stocks will be completely unaffected because they don't get hurt by higher interest.
I think that's pretty reasonable.
I wouldn't say completely unaffected. I would say they continue to be less impacted than smalls.
These companies are cash cows, net lenders a lot of time. It's really ridiculous that they even trade with rates.
It's true. It's true.
Money flow, bro. Money flow. It's the portfolio managers. It's not the companies.
All right, we're all agreeing too much. Get Todd out of here. Let's get.
All right, Todd.
Thanks,
I love
Todd.
you, bro. Let me know when you're down my neck of the woods. I'll meet you in the city. We'll do it up. We
got to get out and play golf
at Shake Shack.
Let's go.
Yeah, we got to get out and play golf, guys. So thanks for having me. Appreciate it all.
Do that. All right, cool.
Later, Todd.
All right.
See you guys. Take care. Bye.
All right. JC has to go. I got to go. We got Sean here.
Can we do one chart for the road? One for the road?
One chart for the road. I love you guys. I'm out. I'll see you next week.
Have fun, dude. Later.
See ya.
One for the road. One for the road.
Wait, can I bring Sean on? I mean, we got Sean. Shawnee, you can hang out.
I thought you had to run too. Yeah, come on.
Yeah, but we got Sean here.
I got nothing to do. Shawnee. It's not till 2:15.
Sean's ready.
Okay.
What's up, knuckleheads?
Shawnee, baby.
How we living?
Pretty good.
What's this beautiful chart you want to share? Let's see it.
Did you stop? Have you still stopped buying Bitcoin? You had like a buy program on Bitcoin.
No, I'm back in.
Go.
I'm back
See you
in.
guys.
You started it up again. All right. This is it. So Bitcoin slowly climbing higher this cycle, one top at a time. We have seen this pattern before, right? So I decided to tweet this out yesterday, give people opposite kind of viewpoint of what was being shared all over the Twitterverse yesterday. You go back to January of 2023, a top that was not a top ended up being a scoop and score into another top that was not a top, into a base, into another top, into January of this year that was not a top again. And look, I can't help but think that the current structure that we're looking at that's been in place since March is also not going to be a top.
Well, this stair step is been it's been observed on multiple time frames, right? If you widen out and look at multi-year time frames, I mean, you see this pattern repeating over and over in Bitcoin. This is just, this is the story.
And you know what else you see when you zoom all the way out on Bitcoin? You can take it back, 15 years, as much data as we have. We never have a bull market in Bitcoin that does not eclipse the prior cycle peak. We're there right now. This would be the first bull market in the history of Bitcoin that doesn't reclaim its prior cycle high. I'm not going to make the bet that all of a sudden this one's different than the rest. I'm also not going to make the bet that all of a sudden this top is different from the rest since last year. So I think patience, typically these little failures, the good ones at least, right? I guess the best failed tops fail really quickly and become continuation patterns like that. So you really want to see this reclaim those pivot lows where the red line is drawn ASAP, like tomorrow. We'll see.
Yeah,
so
I'm welcoming this Bitcoin pullback because I am underinvested in Bitcoin and I would like opportunities to buy it lower. But I'm sure I'm not alone, and that is what continually puts in the bottoms in these things.
Yeah. So everybody's psyched about Carvana today, Sean.
I know, dude. I know. Look, you can't get them all right. You can't get them all right.
Right idea.
Look, we when I put trades on, when you put trades on, we have a plan. And if we don't follow our plans, then we're doomed to long-term failure, right? And our plan was to get out of Carvana if it hit a certain level. It hit that level. We got out. That was the plan. The other plan, Strazza, is that we were in May expiration options. And at least for me, this is one of my rules. as a
You
swing
would
trader
know.
of options.
Yeah, explain.
When I
this.
get into the expiration month, and these were May options, right? And yesterday was May 1st. When I get into expiration month, if I'm in a position and it's out of the money,
Yeah.
then I pull the plug automatically because I know that now theta is my mortal enemy at that point, because whatever premium is left in those options, because they're out of the money, they're just going to more and more rapidly erode. And so even if I was still in that position yesterday, Strazza, I would have gotten out, and I would have been even more pissed about what happened after the market closed.
Pulling your hair out yesterday after the close. That's awesome, though. I think this is just a great example of trader life. Trader life.
And you know what? This is important to talk about, because there are some people in All Star Options chat that have talked to me about it kind of privately behind the scenes, that they were still in the trade, and so they're happy and they made money, and that's great.
The chat right here is buzzing with people who stayed in the trade that are very happy.
Yeah, and it's great, and they're killing it and they're making a great money, and I'm happy for them. However, I worry that you're learning the wrong lesson, right? You broke the rules and you're being rewarded for that. Great. Again, great. But if you make a habit of breaking your rules over time, that's going to bite you in the ass. Yes, you won this time, but it's a bad lesson to learn.
It's how a lot of people get into trading.
Yep.
Getting lucky, not having rules, right? And you learn the wrong way and you blow up.
Yeah, well, I mean, look, our business, there's a lot in our business that has to do with survivorship bias, right? The people that, some people who survived, they survived because they got lucky. Great. Yep. Right? I mean, JC said it earlier, and we say it all the time. We create our own luck. We're not getting lucky. We create our own luck by having a process and sticking to it. And sometimes we don't like it. Like right now with Carvana, we don't like that we followed our process. But if you follow your own process and you follow it to a T as best as you can over the long term, it's going to be, you're going to create your own luck, and that's a wonderful thing. All right, so what are we doing? Is it just you and me today? I mean, for the rest of the show, are the crazies running the asylum here? Is that what's happening?
I think we shut it down.
Hey, Fonzie made me a VIX chart. Let's talk about VIX real quick. I don't know who's running these charts, but can we get that VIX chart up?
Fonz, you want to come on too and go through the key level charts?
Dude, Fonz, yeah. All right, so I wish JC was here because this was my talk about the VIX was really aimed at him. As we know, JC's been pounding the table about wanting to put on delta neutral credit spreads. And, in the prior couple of weeks, that was a good move. That was the move. But, and this chart is probably not up to date because VIX is down even more today. But the VIX has come off dramatically in the last, week. Yeah. Right? Week and a half. Yep. And so I wanted to make the point that the door is rapidly closing on just a free-for-all opportunity to be selling iron condors and selling strangles and straddles right now, because we like to do that when volatility is high, right? Generally speaking, that's when the odds are more in our favor. Well, with VIX showing like it wants to go back and get towards those lower levels again, that door is closing. So I know he's very gung-ho on these trades, and there are pockets of opportunity selectively, like in that GDXJ trade we did yesterday. Yeah. But our field of instruments that we could do it in is declining. So it's not. I have a bunch of those trades on now, and I'm happy to have them on, and they're working. But I don't have a burning desire to put a whole lot more on here.
Sean is ready to put on more directional bets. I
am. I'm not aggressive. I'm not looking for YOLO trades. But the right setups. We're on the back end of earnings season now, right? Or am I wrong? We are, right?
Middle, heart of it.
We're in the middle. All right. All right. Well, as earnings season winds down, the headline risks that are jostling the market to and fro, that's going to kind of slow down. And then I feel charts are going to start performing on their own merits. And so I think there's soon to be opportunity to participate in some directional bets. Again, I'm not feeling like this is the time to throw all your money and go full hog bull market here. That was November, right? November, and we all felt it like this is the time we got to be aggressive. But I think we can be selectively bullish and put on some nice trades that can give us some good rides. Starting now.
And similar to, I guess, October, November, this corrective wave that's really gone on beneath the surface more than anything has brought a lot of good stocks, strong stocks, leadership stocks back to levels where, frankly, I like them a lot more. Right? We had a 3-month really correction from the summer to October of last year. A lot of things were set up really nice, and we had a great, last 2 months of the year. Right now, a lot of things are set up really nice, pulling back to big levels. I think of Uber. I can't stop thinking about Uber pulling back to those prior cycle highs, right? Those charts are everywhere right now. January, February, those charts were 15, 20% above their prior cycle highs.
Yeah. And that also brings up a good point. Back in November, when we wanted to be aggressive, we were looking at stocks that were, near, relative highs, and like they were just about to break out. And we're like, all right, let's step on the gas. Let's get these. Now, because of the correction, if you want to call it that we've been undergoing for the last few months, now we're looking at stocks and setups that maybe they're not on the cusp of making new highs, but they're coming off of significant noticeable support levels. It's a different setup, and it's not a more aggressive setup, but these can work well too.
I'm just going to go down the chat right now. Steve, Sean, talk about Bitcoin miners, but no, we're not going to do that. Join us on Chart Request Live. We talk about them so much. There's not much to say right now, but join us on Chart Request Live. Any of the ticker requests in the chat, Chart Request Live, 1:00 Eastern time. That's for requesting tickers. Weed is catching a bid. I don't know. Weed also just went up in smoke yesterday after one nice day of gains.
Ooh, nice pun. I like what you did there, buddy.
I love JC's, who was it, Dennis Green? His Dennis Green gif. Weed stocks, they are who we thought they were. They still are.
that Dennis Green. Oh, yeah.
So
I
good.
remember that.
So good. Off the charts. Yeah. Tomorrow. Brian Shannon. I was listening this morning.
Yeah. Our next Off the Charts will be live tomorrow. Are we on the podcast streams yet, or is that just video only?
I don't think so.
Yeah, it will be. For those of you who are, and I'm one of those who prefer to listen to podcasts and not watch podcasts, all of these Off the Charts episodes will be available on your favorite podcast streaming service soon. I just don't know when.
Yeah.
We got to get Spencer on that.
We're figuring stuff out. They love you in the chat, Sean.
The feeling is mutual.
Interrupting Steve's golf round again? No, I'm good.
So wait, are you golfing with LT today?
No, I didn't go. So my buddy texted me yesterday. He's my old neighbor from here. His friend grew up together in New York, is like LT's former agent, and they golf together every Thursday in Coral Springs. So he invited my buddy. And my buddy was like, why don't you join us? We were going to golf right behind them, right in the party behind them. Probably meet him, get a picture, whatever. So I said no. And then my buddy calls me this morning. He goes, dude, thank God you said no, because one of their guys canceled. Now I'm playing in the same foursome as LT.
Oh,
man. So anyway.
Oh.
I didn't know everybody was like going away. So whatever. I guess
it's the first I've heard of it.
Yeah. Well, communication, not one of our strong points. We're good at markets, not messages, but.
So it's also a function of the fact that we are all geographically segregated, right? We don't work in the same office. I'm in Colorado. You're in Key West. JC's in Pennsylvania. Spencer's in New Jersey. Yeah, we're all over the place.
We're only together in the metaverse, really.
We'll be together in 2 weeks. I'm excited about that.
Yeah, it's going to be a blast.
Is it 2 weeks? Is it 2? It's 3 weeks.
It's way too soon, and I still don't have a flight.
You're going to book a flight the day before. I know it.
Yeah, I'll figure it out. All right. Why would anyone ever want to invest in the Russell 2000? It's all small banks and companies that don't make any money. We don't. I don't think we've ever outlined a trade in the Russell 2000, right? We use it for information.
And let's be clear. Trading and investing are two different things, right?
Yeah, that's a great point too. You could trade it.
As traders, there are tactical opportunities anywhere, right? Doesn't matter what index a stock is in or ETF.
And frankly, talking about selling premium and betting on things going sideways, Russell 2000 was a pretty good vehicle for that over the past 2 years.
Yeah, the vehicle I use for that is IWM, and I actually do have some IWM. I think I have an Iron Condor on an Iron. I actually have both in two different accounts. I have an Iron Condor on an IWM in one account, and I have a Strangle in another account. So yeah, I agree with you, and those have been working. In fact, I've had several trades in IWM this year, similar type trades that have worked. Knock on wood. I just jinxed it. Now this one's not going to work. We'll see.
And yes, public service announcement. Jamil, great question. We do need an intern. So please, if you're in the market for an internship and you like what we do here, please just DM me on Twitter. Do not email me. Find me on Twitter at @Strazza. Send me a DM and we'll talk.
Hey, Wavy, you could take your Vanna and Charm flows and shove them up your ass. I'm not going to discuss that stuff.
What does that even mean?
I think he's trolling me. Listen,
okay.
options trading, options trading scares a lot of people because of terms like Vanna and Charm and all the Greeks and all these things that that can be very complicated. And options trading can be very complicated. There are people who execute very complicated option strategies, and they do that well. My whole thing is you don't have to do complicated things to make money in the options market. I am a simpleton. I subscribe to the KISS principle, keep it simple, stupid, and I don't need to even understand or know about Vanna or Charm for me to do the types of trades that we do here at All Star Charts. And I'm not going to go down that road of trying to confuse everybody who watches, who wants to know about. And frankly, I'll be completely honest with you. I don't even have full grasps of those things. And I've been trading options for 15 years. I know what I need to know. I focus on that, and that's it.
And this is a great discussion point that Sean just threw out, and why you definitely have to listen to our Off the Charts episode tomorrow, because I think Brian Shannon is the pioneer of that. He literally said on the pod at one point, if it doesn't help me make money, I don't want it, or I ignore it, right? So like there's so much stuff that you don't need to know to be a successful trader. In fact, knowing things and maybe paying attention to too many things can deter you from being a successful trader, I think.
Well, there's so many, I mean, look, there's so many things to know about strategies. There's so many things to know about data and markets. You can't possibly track it all. I have to say, I'm always a little bit in awe of people who are, quote unquote, macro traders, like people who are well-versed in like the political situation and all these different environments, like, especially like Forex traders, right? These people that are paying attention to governments and foreign policies and all these moving parts. And I'm like, wow, I'm impressed that you can keep all this in your head and keep it all straight. Like for me, whoa, it's way too much to know. I just want to focus on, price and the products that I trade, and that's it. And I can focus that way.
Question here for you. Do you put on trades from a TA viewpoint or from a volatility affecting price from the options? Both, right?
TA first, right? Yep. I want to like the setup first. I want to see a setup that I like. And once I'm determined that I'm bullish or bearish or neutral, then I go into selecting the option strategy, and volatility will come into play at that point, because, if volatility is high or low, that will help me determine which strategy I use. But first step is what's the technical picture looking like? Where's the stock? What are the price levels? Is it near an all-time high? Is it coming off a low? Those are the things I want to know first.
Yeah. So we often say, oh, Mary is like, the biggest consumer of our research. Sean's right up there. So he's looking through our technical research. He sees a chart he likes. Ooh, Strazza, I like this one. And then he crafts an option strategy around it that makes sense, right?
Right. I get 90, I'm not gonna say 100% Strazza, but I get 90% of my trade ideas direct from the research that you and the analyst team are putting out every day. That's where I get my best ideas.
All right. Favorite book. I'm not going to say this is my favorite. That's always a good question. I usually say Brian's, but we've talked about him enough on here. So we were talking the other day on Spaces. Alexander Elder's Trading for a Living is just so good for like a beginner trader. He talks about all the soft stuff, all the extra shit that nobody thinks about, like having a separate office outside of your home, right? Or at least a quiet place. He talks about journaling your trades, right? All the stuff that we don't talk about enough as traders is in that book. So I think that one is definitely in my top 5 or top 10. It's up there. It needs to be read. So I'll shout out Trading for a Living. You got a good book? Good book.
Oh, dude, I've been pounding the table on this book. It's a new book. Usually, the thing about trading is like most trading, I don't want to call it advice, but all the best principles of trading haven't really changed, right? Like the books that were written 50 years ago, 100 years ago are still relevant today, like the good ones, right? So I'm not going to recommend the old school ones, but there's a new one that came out last year. I've already reread it 3 times, Strazza. I strongly recommend it. It's called Best Loser Wins. It's by an author named Thomas Hogard. He's a Danish trader. And I'm telling you, Strazza, it gets into the mental aspects of the game better than any book I've read in a long time. And there's a lot of tough love in it. But I'm telling you, if you haven't read it, Strazza, you have to read it. It's great.
All right. Best Loser Wins, $33 on Amazon. Just ordered it.
Yeah, dude, it's amazing.
Wait, you get the audio book with the paperback? I don't understand this. Okay, well, we'll figure it out later.
Look at you making transactions live on the show, buying books.
It's it's a lot easier to buy a book on Amazon than it is to go buy a call option on Interactive Brokers.
Well, look, if you see in chat, there's a few people who have also read that book, and they all agree it's an amazing book. Yeah, it's just, I mean, look, the thing about the book is that it probably doesn't tell you anything you haven't heard before, but the way he presents it and the way he reminds you about certain things, it's a phenomenal read. It's easy to read. Like I said, I bought it. It came out last year. I bought it, I don't know, October maybe. And I've already read it. I mean, I'm 4 times through it. I think I've got so many highlights in it. It's crazy.
Got a long car ride tomorrow. I'm going to hit up the audio book. And you know what I'll also be doing? Boots on the ground research for Carvana. You think the towers are full again now with this earnings?
Oh, I was just going to say
cars
that.
back
You're
on
going
the
to do
Carvana towers? Yeah. We'll see. I'll take pictures. I'll pull over. I'll risk my goddamn life on the overseas highway. Well, no, I guess it's...
Are you in the market for a new car? We were talking about the Tesla Model Y the other day.
Probably going to get a Tesla, but I just got a new car like a year ago.
I'm
getting it. My next car will be a Tesla. I just don't know when that'll be. I want to get it while they're still giving these crazy credits and stuff. So we'll see.
Yeah, I bought one
in Florida.
I bought one last year, and I took advantage of the tax credits. We got $7,500 back from the federal government, and we got $2,000 back from the state of Colorado. They all hit my tax return this year. Wonderful tax return this year. I don't usually get a tax return or refund, but got a refund this year. It was great.
I think those programs probably continue, but it's hard to say.
Well, in Colorado, they actually upped the refund. So if you buy one this year, I think you get like $4,000 back from $4,000 or $5,000 back from Colorado. It was $2,000, which is what I got, but now it's like $4,000 or $5,000. They're pushing it.
It's when the government's on your side with stuff like this, it's just you never want to be on the opposite side of that, right? The government's giving you subsidies for your product.
You know what's really cool? I mean, I'm not going to tell people anything they haven't heard if they've been paying attention to Tesla, but Tesla's cars, I mean, they're like an iPhone in the fact that it's always upgrading, right? A new software comes out, then it's a new feature. This past month, it just ended, which is a bummer. In April, they gave Tesla owners, I assume all Tesla owners, I don't know if it was all, but certainly for me, we got a free 1-month trial of the full self-driving, right? And all it was an over-the-air software update. Yep. And all of a sudden, it's like a new car. It drives, it handles, it everything different, like a whole new car. Like, how amazing is that? Have you ever owned a car that some over-the-air software update now feels like a new car? No.
You let it drive you around?
Yeah, it's not, it's not what you think. Like, it's not like you just hit a button and then you sit with your arms like this and you just let the car drive you. It's not a robo taxi.
Right.
There is some involvement. You have to stay engaged with the car, but yes, it does make the turns for you. It stops at traffic lights. It stops at stop signs. It changes lanes into faster lanes for you without you having to do anything. It's pretty sweet.
So with all the cameras on these cars, there's like an inverse TikTok issue, right? Where similar to how the United States doesn't want TikTok in the United States because it could be used for spying when that data goes back to China. Tesla's all over the road in China, also not good for them if that data is being sent back to the US. So it's kind of crazy. There's like national security concerns, obviously, when you're making a vehicle that has cameras all over it and want to sell it all over the world.
And
So
even has a camera inside the car above your rear view mirror that actually looks at you, and they use that for the full self-driving. And when you have cruise control on, it's set so that like if the car sees you looking this way or looking behind or basically just not paying attention or looking at your phone, it'll ding you. It'll scream at you like, hey, pay attention.
It's got to be the same or similar technology as the Vision Pro, right? Where it literally knows not just if you're looking, but where your eyes are looking. These cameras are so good.
But that one great feature of that is that, and this is one of many reasons why Teslas are the least stolen cars on the market right now, because if you steal someone's Tesla, I don't even know how you would do it, but if you did it and you sat down on the seat, well, there's a camera looking right at you. You're going to be videotaped. They're going to have full view of who you are. Like, why would you ever want to try to steal a Tesla? You'll be caught quickly.
Yeah, and T-Man, yes, you're right. It's not a new issue. China's aware of it, been aware of it, and taking the necessary steps to make sure that data doesn't come back to the US. But it's still very interesting. One more before we head out. There was something in here, Bill. Where is it? Because of stocks like Enphase, that's why you invest in the Russell 2000. Just buy Enphase, right? Just if you like a stock in the Russell 2000, don't buy the Russell 2000 so you can get 1 to 2% weight of it. Just buy that stock, right? So I don't know. I think for long-term investors, there's really not much there in an index like the Russell 2000. So Sean, you got anything else?
I was just gonna say, do we have somebody to roll the recess bumper, or are we just flying blind here?
Nope. Yeah. Oh, we do. We do.
We do. All right. Roll the recess bumper.
Bumpy.
Oh, that's awesome.
Works.
We have an eye in the sky, making sure stuff happens behind the scenes. All right. Here's my recess.
Give it to me.
Tomorrow morning at the break of dawn, 6 a.m.
Oof.
I know, crazy. I gotta go and get a little small knee surgery going. I've had a knee problem. My knee's been hurting for literally years, and I thought it would just get better with I did some physical therapy. I've been working out. Nothing has worked. I've done all kinds of stuff. Finally, a couple months ago, I said, all right, time to do something serious. I got an MRI, looked into it. Sure enough, I've got a small tear underneath my kneecap. That's what's causing the pain. So I'm going in tomorrow morning. They're going to do a little procedure. They're going to go in and pull out all the scar tissue. And then they're doing some fancy thing where they're taking my blood and whipping up all the white blood cells and then injecting that into my knee. And it's supposed to naturally heal it. I don't know. Sounds crazy.
It does sound crazy.
I'm doing that tomorrow morning. So I'm a little bit nervous because I hate needles. And there's a bunch of needles involved in this procedure.
I hate them too. All right, everybody say a prayer for Sean. Hope for a speedy recovery, but it's not bad, right? Like, how long are you out?
No, if everything goes according to the plan, it should be pretty easy. I think I'll just be like immobile for maybe 2 days, so basically the weekend, and then for 2 weeks I'm supposed to just not do anything. How
immobile? Are you going to be like in a wheelchair for 2 days?
No, I'm not gonna be in a wheelchair, but for the weekend, my doctor said you probably just want to sit on the couch for the weekend and watch sports and not do anything, and then after those 2 days, then it'll be like 2 weeks of I could walk around and I could do normal things, just nothing, like no exercise, no running, no weightlifting, no hiking. I just gotta keep it chill.
You think this probably happened from hiking, excessive hiking?
No, I think it's because I have a really bad bunion on my foot. And so I think the bunion just kind of caused me to maybe, walk a little funny on my knee in a very subtle way that you would never notice. But, over 20 years of walking that way, the things compound. So I can't point to any one thing that I did, like any hard fall or weird twist or anything where I hurt my knee. It's just something that's happened slowly over time.
All right. Well, we'll be thinking about you, buddy.
I'm just hoping that I'll be back in fighting shape by the time we get to Sonoma, because I'm really looking forward to doing some of those hikes around there. So I'm hoping I'm back to normal by then.
Yeah, me too. I'm looking forward to doing some with you. All right,
Yeah.
my recess is go New York, go New York, go. Hopefully the Knicks close out the series tonight. It's on at 9 o'clock. Really looking
I'm rooting for Knicks Nuggets in the finals, baby. Come on, let's make it happen.
Me too. That'd be sick. That's all I got. So thank you, everybody, for joining us on the morning show today. Join us at 1 o'clock Eastern time for Chart Request Live. We'll be back for another morning show tomorrow, 8:30 a.m. as always. So we'll see you there. All right, everybody. Thanks for joining. Thank you, Sean, for helping me take the show out today.
All right, buddy. Anytime. See you, everybody.
Do what you need to do to